Hello and welcome to Weekend Investing Daily Bytes. Today is 9th September. We are shooting episode number 90. And as we do on the last trading day of every week, we do a Ask Weekend Investing round where we ask our patrons to send in their queries and we try to resolve as many as possible on that day. Let's first take a look at the markets. So the markets were quite resilient today, and FMCG, metal, commodity stocks, energy stocks, public sector enterprise, they were all inching upwards, although there was no large moves. However, besides the real estate segment and some banks, I mean, more or less things were quite bullish, and small cap, mid cap stocks were also gaining ground. So it seems that market has digested the gains of the last many days and is looking for another leg up if external factors remain conducive. So as you can see, Nifty although closed in flat region, but small cap indices and mid cap and the larger broader based universe actually gained ground. MI 35, MI 20, MI all cap, MI 25, MI 50, MI ATH2 all gained ground much above the market. We had MI ATH taking a breather today, but all is well, and for the last month and 3 months all figures are quite robust. So the topic for today is Ask Weekend Investing, and we are looking at 9 rounds have gone by, and all these rounds are posted, these videos are posted on the Weekend Investing Hub. So there's a huge repository of question bank that is already available. So most of the frequently asked questions have already been asked, and we try to take up questions which are unique. Let's start with question 208. Rajesh is asking, weekend investing products bet on individual stocks with momentum. So why do we compare with the benchmark index? Is it also possible for the weekend investing products to grow even if index is declining? So good question, Rajesh. For the lack of a better benchmark, we are using the available benchmark. We could use some momentum index also, but each momentum index is also built very differently, and hence that may or may not be the right benchmark. And also in each of our strategies we have a specific type of stocks or segment of the market that we are addressing. So if in these strategies which are small and mid cap, we try to compare with small and mid cap benchmark. Strategies which are large cap only, we try to compare with them. Strategies which are, let's say, all cap, we try to compare with CNX 500, which is a more broader based index. So that's why, and to answer your second question, it is also possible that if index is declining, the weekend investing products may grow, as we have seen in several years. If you go, and so let me just show you the weekend investing hub. 1 second, just give me a second. So what we have done is we have added some new tabs here for monthly returns, quarterly returns and yearly returns. So let's go to yearly returns, and you will see here that, let's say, let's take a look at all cap data. So in the year gone by, FY20, CNX 500 was down 27%, whereas MI ATH2 was up 9%. Right? So there can be situations where the broader index is down, but you are up. Let's take another example. Let's go into some quarterly returns. There are many such examples. Actually, we will be able to find, like you can see here, CNX 200 is down 3%, Nifty 50 is down 3% in this quarter, whereas the corresponding products are up very nicely. So this is very much possible that And the reverse also may be possible in some instances, that we are down and a market is up maybe a little bit. So just to give a flavor of this, so please go through all these sheets. These are extremely good data sheets to compare one strategy versus other, and to compare strategies versus the benchmark indexes. And we've also segregated from where is the real data and where is the back-tested data, so that you have a very clear picture of what is happening. So coming back to the presentation, let's go to the next question. Atul is asking, these B's products, are they cash equivalent? If I have money in B's and I need money for rebalance, do I need to first sell these B's separately to get the cash? Or automatically these B's? So nothing happens automatically. The Nippon Mutual Fund has several B's products, liquid B's, gold B's, nifty B's. B's is actually a short form for benchmark exchange traded fund, which was the earlier name. It was later on taken on by I think Goldman, and then Reliance, and then now it is in the hands of Nippon. So nothing will happen automatically. These are just like holding a stock. You will need to sell them to raise cash, and then that cash can be deployed. Next question is again from Mr. Atul. New tool for rebalance on different days. Will it simulate the real life? Let's wait for the tool to come and then we will answer this question. Please wait for the end of the month. That's where Smallcase promised us to provide that. Question 211. Since the market is at all-time highs, no one can predict where it will top. You are absolutely right. Suppose it is near the top. In that case, where I have subscribed weekend investing in August, booking profits from Smallcase and reinvesting on a big dip, is it a good idea? It will be a great idea if you can predict it. I can't predict it, when the market will top. Hence, I say whenever the market seems overextended, like it is seemingly today, go slow, come in slowly into the market, so that even if market is near a top, and when it falls in the next 6 months, 1 year, 3 months, whatever is that, you will be able to get in gradually. So treat it as a long-term game and come in gradually. Next question is from Dr. Aesthetic. Why is there a huge price difference between live products and similar small cases? Do live products offer anything other than Friday rebalance and a higher recommended limit? So pricing details are business decisions. I would not like to discuss them. But yes, the live products are suited for higher AUMs, as you have to manually execute limit orders and they are executed in the live market as the market is closing. So there is no slippage between what you get and what is the model, as the model also assumes the weighted average price of the last half an hour. Mr. Anukul is asking, can you do a daily byte on different numbers that are part of the investment? Current value, money put in, current returns, realized returns. I know there's an article on Smallcase blog, but I think you will do a better. So yes, we can do this. I'll ask my team to take a look at this and we can definitely do this. Next question is again from Mr. Anukul. Is it only advisable to invest more in an existing small case when there is a big drawdown? That is not advisable when we see anything above 6% or something, not able to identify right time to invest. So there is no right time or formula for this. This will have to come with judgment. If you are not doing a regular input into the market, then maybe you can create your own thumb rules, what kind of drawdown will cause you to invest more. And there is no one formula that I can give you, unfortunately, for it. But high double-digit drawdowns are very good points, in my opinion, for investing more into any product. Next question is from Atharv. Can you throw some light on how to identify some hazardous stocks? How to get rid of them? So this may be a very general question. I don't know hazardous in what way are you looking at. There could be hazardous promoters, there could be hazardous actions taken by the company. The price action could be hazardous. So we are looking only at price action, volume action, and as and when it is hazardous compared to the proprietary model rules, we remove them without really classifying them as hazardous or not. So there is no need to create a bias about which is a, when does a stock become hazardous or good in that nature. So just keep the rules very, very simple and you should be able to manage that. Next question is from Jagannathan. Thanks for your DBs. Thank you very much, sir. Highly useful for new investors like me. Can you please influence Smallcase? That's a tough one. To give us an option to change brokers or use two broker accounts. It will be very helpful to switch. So what happens is that Smallcase system is built upon two identifiers, your email and your DP ID. These are the two matching IDs which are used to create the identifier in their database. So if you try to change your email or if you try to change your DP, it messes up the entire system, and hence this is a structural constraint that system has. If you want to change brokers, what I would suggest is that you get in touch with our support team. We will request Smallcase to try and give you a new subscription on your new email and broker ID and refund you, let's say, the unused portion of your previous one, but that is on request basis. That's not really their standard policy. So you write to us, support@weekendinvesting.com, and we'll try to make a good effort for it. Ayush is saying, what about us young investors who do not have any financial advisor? From whom can we seek out these sort of financial planning advice? So Ayush, there are a lot of financial advisors on Twitter who can help in this. We as a license holder of research products cannot give any advice, and hence we refrain from that. Mahesh and I think even Capital Mind, they all have financial RIA licenses, I think, and there are many others. If you tweet this tagging me, I'll definitely try to find more advisors. And there are so many good advisors on Twitter, and I'm sure people will help you out there. Manat is asking a hypothetical data crunching thought and exercise. What if weekend investing program / design a very tight ruled momentum portfolio which rebalances every day? What could be the potential max drawdowns? Just an interesting exercise. Is it even possible to design such portfolio? So it's definitely possible. There will be a lot of churn because as you come down the time frame, the churn goes up. The cost of the churn goes up. The per churn slip will become meaningful as you compound it on each churn. So hypothetically it is possible. Realistically it is a nightmare, trying to do that for a little bit more gain. If it was a difference of, we are making 15-20% here and we can make 40% there, then it would have been a different thing. But I don't think there is substantial gain. But yes, hypothetically any kind of system is possible. Even on an hourly it is possible. So it will all depend upon the system design and the intent. So as a weekend investor, our intent is that our users should move away from the market noise, not see the market for a week, just spend 5 minutes on a Monday and then just be it and get on with their lives. So if the intent was to keep the people busy every day looking out for their portfolio, then of course that kind of product can be designed, but that is not our intent. Next question is from Nimit. Some stocks get into BE category and the momentum fails. How soon and when does a stock come out of such categories? So this question is best asked from our dear regulator, who has coined rules which are with good intent, but they do not really deliver when it comes to investor protection or maintaining liquidity in stocks, so on and so forth. So from that perspective, these measures are not really working. But if all retail investors get together and petition and make a PIL, and a few lakh users can petition against all these classifications and arbitrary putting them in various categories and stopping liquidity, I'm sure the regulator will listen, but that will be another day. Next question is from Sambhya. You and your team are doing a fantastic job. Thank you very much. For momentum SIP, if I manage order instead of SIP and buy more winners, I sway away from the weights. Does small case still bring me close to the weights? So I think what your question is that if you keep managing your order and you keep trying to customize your rebalance to buy only winners within the weekend investing small case, and then if you do a regular rebalance, does it bring you back to the weight? So yes, the algorithm is designed by Smallcase so that if you do a regular rebalance without trying to customize it, it will try to bring your portfolio back to where the model stands in terms of weights. So if you want to do a like, this is for advanced users actually, it's not for newbies or regular users, and some advanced users have that itch to do more, and if they are able to get more returns, why not? So if that is the case, then you need to keep customizing your rebalance and not do a regular rebalance. If you do a regular rebalance, it will bring you back to it will suggest that you come back to the weights of the model portfolio. Palash is asking, please do a comparison of rolling returns for Nifty Momentum Index and weekend investing strategies. Okay, noted Palash, we will do a DB on this and see how we stand against the Nifty Momentum Index. Next question is from Neha. I struggle when it comes to exiting stocks. Neha, everybody does. And unless you have a proper way of exiting, there is no way of an easy exit. Sell too early and see stock zooming ahead, or too late and see decreasing unrealized profit. How to identify when to sell for maximum returns? So that's a tough question. Maximum returns is something that you can never get. So it's like saying that I am picking pennies in front of the road roller, but I want to pick that last penny also. I don't really care if my hand goes under the roller. It is not possible. You will have to give up something. If you have stock has gone up from 100 to 200 and you still want to trail it, but you cannot exit at 200 and get the maximum return. You will either have to trail it or let it go beyond 200, and then when it starts to recede, you will get out at 200, something like that. So some buffer you'll have to give up. There is no way where you can buy at the lows and sell at the highs. God has not created that system yet. Rohit is asking the next question. I'm using 2 products from Weekend Investing. Thank you, Rohit. Is it possible to suggest a range of price or average price while rebalancing to avoid rush to get in? If you are releasing GB on Sunday, can we do AMO? So the price is always the closing price of the previous week. So there is no question of a range of price. You'll have to judge whether if the price is moving too far away from the intended closure of last week. If it is too far away, you can wait. If it is not too far away, you can buy it or sell it at that point of time. So it is a matter of judgment that you need to do, or over time, if you can figure out that rebalance is better for me if I do on Tuesday or Wednesday or Monday evening, you could do that as well. So GBU is released on Friday, and you could use a AMA order if you like on Monday morning, not really an issue. These stocks are known to you before the market opens. I mean, if you log into your Smallcase accounts at 8:45 a.m. on Monday, you'll know the stock changes. Next question is from RD. If we have picked MI20 and suggested amount is 1 to 5 lakhs, then if we put 1 lakh and afterwards did SIP for 4-5 years, invested amount reached 4 lakhs, then can we continue doing SIPs or move to another strategies? So suggestion is to move to other strategies once you are beyond the recommended limit, so that you diversify across strategies and more people can get a chance to come into the introductory strategies. If advanced users will keep building their AUM in strategies which are meant for smaller AUMs, then the new users also do not get a chance. So please have some sympathy for newer users also and move to other strategies. Tushar is asking the next question. Is it possible to make something like an overlap ratio or in percentage terms of stocks in small cases within similar categories? It will aid the subscriber to make better decision. So if I'm understanding your question correct, you are saying that we create some utility where it is always disclosed that what is the overlap between two of our products. So yes, we can consider this. We can consider placing it on the hub. It is a bit tricky to have overlap ratios done over within our 10 strategies, but we will try to work this out and see if we can do it. So thank you for this suggestion. So this is the end of this round 10 of Ask Weekend Investing. I hope some of the questions are getting answered, if not all. I am trying my best to answer all your questions and be at a situation where you will not need to ask any question from me. I hope that situation comes soon. We are also happy to announce, as I did yesterday, that our corporate structure is in place. SEBI has granted us a research analyst license, and all the products, all the branding, all the mandate has moved to this new entity. Nothing changes from a user's perspective, and it is only a structural change from a sort of an advanced compliance perspective in terms of changing regulatory environment in coming days. I also wanted to touch upon another aspect, that we are going to have a change of pricing for some products as announced earlier. So MI all cap, which is still running on introductory pricing since last 2 years, where the intent was to go to the regular pricing in 6 months, but then it was delayed to 12 months, then to 18 months, and now at the end of September we will finally move away from introductory pricing from 9,999 to I think 14,999. So that will happen on all cap for everybody. And live products also have been running on the same pricing for the last 5 years, and there the pricing will move to 49,999 for each product from 1st October onwards. This was also announced earlier. So just reminding that these two price announcements are there, and I will see you in another video. Thanks. Bye.